This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So following on from that previous example, let's go through and look at an example that is more geared towards what you would see as part of an analysis and interpretations question within the exam. So what you can see there is the requirement at the bottom wants us to calculate two ratios, gross margin and operating margin. Nice and easy to start off with, hey? For is it the 2019 and 2018? And then in part B, use the information provided and the ratios calculated above. That's all two of them. In the exam, you usually see 3, 4, maybe 5 is a bit of a push, just because of the number of marks within the analysis and interpretation question that we have available. So 3 to 5, let's say, in the real exam, and comment on the comparative performance for the 2 years ended. Okay, excellent. So what have we got? Should we work out the figures first? Crunch the numbers. That should be nice and straightforward. So we're looking there at 2 years. 2019, 2018, gross profit margin and operating profit margin. Whatever you do within the exam, do not write out the ratio. No, don't. Do not waste your time. Okay. You don't get any marks for it. If you write down gross margin is gross profit divided by sales, put in all of the wrong numbers and get it totally mixed up, yeah, you've just shown that you can't calculate a ratio. You've shown that you know what the ratio is, but you can't use the numbers, so you're not going to get any marks. Okay, so don't waste your time. So here what we've got, gross profit 23, sales 42, and then gross profit 28, and is it 45? You don't really need to put in the numbers here, but I will do. 23,000 divided by, is it 42,000, multiplied by 100%, gives me 54.8%. And then for 2018, is it the 28,000 divided by 45,000 multiplied by 100% gives me 62.2%. So again, nice and straightforward. Okay. Let's just check. 28 divided by 45, 23 divided by 42. Excellent. My operating profit margin. So we're using these figures here, aren't we? 13 and 11. So here you've got, wrong colour, 13,000 divided by 42,000. Again, multiply by 100%. Does that give me 31%? And 11,000 divided by 45,000 multiplied by 100% gives me 24.4%. Voila. Okay. So what you can see there on the gross profit margin, there has been a fall in my gross profit margin, but there has been an increase in my operating profit margin. What we need to be able to do then within the next part of the question is to be able to go through and do the analysis, explain the movement within the figures. Okay. So what have we got? It says ACCA is a retailer and trades through its stores on the high street selling high quality goods. Okay. So key bits that you've got there. When it comes to questions, you're either going to get a manufacturer, a retailer, a service company. Here we are given a retailer. And we know what a retailer does. Dead simple. it just buys and sells goods, doesn't it? And here, those goods, it says, are high quality. So if they're high quality, I would expect high margins. Okay, there we go. So it's not at the lower end of the market, it's at the higher end of the market, isn't it? Other bits of information, it says the company has recently been suffering, is it there, from rising costs it has been unable to pass on to its customers. So if that's the case, if you have your rising costs, what's going to happen? Well, the issue there is that you should see falling margins, shouldn't you? Do we? Yes, we do. We see it within your gross profit margin, okay? Because those costs are the costs of purchasing the goods that we then go on to sell. The purchase cost is rising, but we can't pass on that increase in price onto our customers because that might then put the customers off and they might go then elsewhere. So we've taken the hit effectively. So when you're analysing your gross margin, you would talk about the rising costs, okay? What you've then got as well is it that it says in response to the number of people shopping via the internet, ACCA has implemented a cost cutting strategy in the prior year. So therefore we'll have probably made redundancies, closed down stores. We now no longer have as many people employed. So therefore that was all done in the prior year. There'd have been lots of costs going through in the prior year, and therefore there will be fewer costs this year. And you can see that, can't we? There's a fall in the cost, but how does that impact the margins? Well, we've seen there that there was an increase in your operating profit margin. So what we can also go on and use from the question is that there has been a cost cutting strategy. So therefore we will see falling operating costs, which will therefore increase the operating profit margin, wouldn't it? Okay, there we go. You could as well, if you want, make a comment. I don't think I have within the answer because I was just focusing on using gross margin and operating margin, just easing you into it in terms of performance. But it also says, and in the current year, ask shareholders for funds to help reduce its debt burden. Where you can see there that we've issued shares, presumably got the cash in, used that to pay off the debt, and therefore the interest cost has fallen. Okay, so we can include that as well. So what we've got there is that we've repaid the debt, and that has reduced in or resulted in reduced finance costs, hasn't it? Okay, there we go. What you should always try to do, just to try and scrape a mark just at the end, is that you should always try and go through and form some form of conclusion. Well, here what you can see overall is that, okay, yeah, sales are falling, but our profits are increasing. Okay, however, there's only so much cost cutting that we can do. It's going to get to a point whereby we can't cut costs any further, and if sales keep on falling, then that's going to erode further into our margins, and reduce our profits into the future. So we really need to be quite careful here, don't we? If we're operating on the high street and we're trying to cut costs because all our competition is online, maybe we need to start thinking about not just trading through the high street, but maybe as a strategy of going and selling our goods online as well. Okay, because that won't require a huge cost base, but it can go through there and readily increase our sales, which will then improve the margins and improve our profitability. Okay, I'll let you put that into your own words. I'm not too worried about what you write at this moment in time. I really just want you to start to think about what you should be doing. Okay, you need to put in a conclusion at the end to try and get yourself a mark. You need to calculate the ratios without writing the ratio out itself. And then you need to comment upon each of those ratios plus additional comments as well. Okay, so we've gone through there, spoken about the fact of the rising costs. We've spoken as well about this cost cutting strategy. We've spoken as well about repaying the debt. You know, what we could add in there as well is the fact that we have our sales have reduced. Okay, why have our sales reduced? Because people are using the internet and they're not shopping on the high street, are they? Okay, that is a global trend, isn't it? Everybody's online and people are no longer going into city centres, supermarkets, shops to go through there and buy the goods. We're all buying it online. And therefore, if this business is structured whereby it just sells on the high streets, it's going to carry on struggling unless it changes its strategy. So there you go. That's a gentle introduction to what you're going to see when it comes to exam style questions.